Okay, beautiful people. It's your boy Tumele Jepua here. Jepua King. Just on this video here, we're gonna be mainly focusing on the US30 and NAS100 with top-down analysis. You understand? Just a session with me where we just go through the analysis of like how this whole thing, how this all buy sells came about, how the market came to 10 at this level, how the market did that. And most of you guys by now, you don't know why USDT is buying, you don't know why Nasdaq is buying. You understand? So I'm just gonna try to enlighten you with some information that can be able to show you the light, man, of like where we might go, where we might do this, where we might not do that. You understand? So don't judge me, guys. I'm just gonna try by all means to help you where I can help you. And then if you see the light, you see the light, but you all make mistakes as individuals. You understand? So I'm gonna teach you and help you according to my understanding. You understand? So before we get anywhere further, I just want us to talk about something now. You understand? I'm gonna teach you something, and then we're gonna go check out the charts. This video might be long. So okay, let's say that okay, we are in a trend. So now we're gonna talk about trends. So this is what I'm gonna be teaching you today about trends. So we're gonna talk about what an uptrend, right? An uptrend occurs when the market is doing what? When the market is pushing to the upside. Let me just draw something like this. Understand? An uptrend occurs when the market is doing what? When the market is pushing to the upside. So an uptrend consists of what? An uptrend consists of high highs. An uptrend consists of high highs. So these are the properties of an uptrend. High highs. And also consists of what? And it also consists of the basic rules of what? High lows. Basic properties actually consist of your high lows. And then the rule of an uptrend states that okay, on an uptrend, ladies and gentlemen, on an uptrend, the market will give you what? A breakout of structure, and then it will do what? It will simply go down to respect what? The previous high low, which means it will just go down to do it to mitigate this band of interest here. You understand? And then it's gonna go up to break what? It's gonna go up to break the new current high. So as it breaks that level, it needs to come back and respect what? The previous high low. You understand? We go up to do it to break the high, and then we go down again to do it to respect what? To respect the previous high low. You understand? So this is the movement. This is the current character. You understand? Of an uptrend. This is how an uptrend becomes strong. This is how the whole thing of an uptrend goes about. You understand? So the question now is that okay, since when we have these rules of an uptrend and properties, you understand? What happens if an uptrend tends to do it when an uptrend tends to break a high low? Because of the rules of an uptrend states that on an uptrend we break highs and respect lows. So if the market breaks this level here, because the market breaks that level there, what's going to happen? So what we have here, when the market does that, we call that with unconfirmed trend. Unconfirmed. We call that what? An unconfirmed trend, which means that okay, the market broke the rules, so we don't know where the market might go. Guys, bear this in mind and listen to me. You understand? So what the market might do is that okay, the market might, this is the first scenario. The market might go up to do it to tap into, okay, to break this level here and continue pushing to the upside. You understand? Doing what? Giving us a strong bullish momentum, and then coming back to respect this point of interest and then going up. Understand? So this side here, everything happens like nothing happened. Understand? So now we'll come back to do it to mitigate this point of interest here. Understand? So this is the first scenario. It might continue with what? It's bullish trend. You understand? And then the other thing that might happen is that okay, the market might do it. The market might what is important is the supply level we have here. You understand? Most people know that okay, when the market creates such things, what do you look for? You look for a possible change of market character. So if the market is pushing up, guys, listen to me and listen carefully. You understand? When the market taps into this POI here, I normally do not advise most people to enter at this level. Why? Because of you also that okay, the first scenario the market might do it might simply break this level and then continue pushing to the upside. And then what you can do is that okay, you can wait for the market to do it, to push to the downside and then to come and break this low here. Once the market breaks that low, this thing it gives you a clean opportunity to see that we are on a bearish trend. It will tell you that okay, you will see that okay, we have a downtrend structure now. Instead, the market gonna give you that breakout structure, grab its liquidity, and then this is where I'm gonna advise most people to do it, to take their entry point. Instead, I'm gonna advise most people to do it, to take the entry point at the second one, at this level here. You understand why? Because we have a confirmed trend. How do we have a confirmed trend? A confirmed trend comes when the market does what? It respects the supply and then it breaks a low and then comes back to respect that supply. So your entry points can be at that level. So this is how the market goes about switching its trend from a bullish trend to a bearish trend. So that's the information that I wanted to give you for an uptrend. For a bearish market, so for a bearish market, let's say the market is pushing to the downside, beautifully, and then what does it do? It breaks a lower high. You understand? It breaks what? It breaks a lower high. You understand? So how do we see that? Okay, we are on a bearish trend. The market creates what? It creates our lower highs at the top. Our lower highs at the top. So let me just make it a little bit of how everybody wants it to be. Let me just make it a bit like this, just to show you guys what I want you guys to see. So let's say that the market takes out that high. We have something, yeah. So we have our lower highs, a lower high, a lower high, a lower high, and then we have what? We have a lower low. We have our lower low. Then we have our lower low. So about that. We have our lower low, and then another lower low here. This is gonna take a while. Okay, let me just let it be here. So technically, we know that okay, on a downtrend, the market will do what? The market will give you a breakout structure at the bottom. It grabs this liquidity and then it goes out to do what? To mitigate this other block here. So this is the structure of what? Of a downtrend. Understand? So that's the current structure. Sorry about that. That's the current structure of a downtrend. So it does that also. It gives you a breakout structure at this low here. This one. So it gives you a breakout structure at this level here. And then what does it do? It grabs this liquidity and then it goes out to mitigate that other block. So we're also gonna have an a breakout structure at this low and then a grab of liquidity. So but then at the level, what does the market do? The market fails to do what? To respect this point of interest. And then look what it does. It goes out to do what? To break this lower high. So which means at the level we have what we call what? Unconfirmed. We have what we call an unconfirmed trend. You understand? The market is currently unconfirmed. We do not know where the market might go. You understand? So what can happen is that okay, we might expect the market to do it, to continue with its very structure. It might continue pushing with its very structure and then come back to mitigate this other block here. You understand? That's the first thing that might happen. And then the other thing that might happen is that okay, which is what most people look for, is that okay, they be looking for a possible demand level here. So within this demand level that we're gonna have here, the market is simply going to do what? The market is going to respect that demand. Like I said, I don't advise you guys to take that entry point there. Wait for the market to give you what you call a confirmed trend by breaking this structure here at the top, by breaking this level there, and then what I can advise you guys to do is just to wait for the market to come back pushing down, type into your point of interest, and then start looking for buying opportunities. So this is where, so this guy here, let's say that okay, he was sorry about that. It was mitigated here. So that this guy was mitigated. Okay, so which means you're looking for an entry point within this demand level here. That's our level of demand that you're looking for an entry point for. Understand? So that's what I can teach you for now, guys. Understand? A switch from a bearish trend to a bullish trend. Okay. So now let's remove and go straight to the charts now. So you're gonna do a top-down analysis on NAS100 from the monthly time frame. So what do you do first thing when you enter your chart? You look for the trend. As you can see that, okay, the market is creating what? High highs, high lows, high high, high low, high high, high low, high high, high low, high high, high low. And then, yeah, high highs, high lows, high highs, high lows, high highs, and then high low. So that's the theory of what? Of an uptrend. You understand? And then at the current moment, what is important that the thing that I want us to look at is that, okay, the reason why Nasdaq has been buying is because of what we have on the monthly time frame. We have a POS at this level here. We have a breakout of structure at this level here. You understand? So we have what? We have this point of interest here. You understand? That most people didn't see. You understand? We have what? We have this point of interest here, which means we have this demand level here. You understand? So now what we're gonna do is that, okay, I'm gonna analyze this whole thing, how it went about dropping to this point of interest here. So if you go to our weekly time frame now, we can also see that, okay, we have this point of interest here also. That shows us that, okay, the market really did good. It really respected that guy. So look, when the market broke that structure there, when the market broke this structure here, what did it do? It created what? A series of what? High highs and high lows. You have a breakout of structure, a graph of liquidity, a point of interest that was mitigated, right? A breakout of structure, but the market never came and respected this point of interest here. So gave us what? A series of also what? A breakout of structure. Maybe there might be, okay, I think there might not be any point of interest at this level because of the market took out that low, but then it failed to do what? It failed to respect that guy because of what? At the structure here, what are you looking for to? Most people are gonna look for a change of market character. But then, like I said, it's not always good for you to take this entry point because of what? The market might continue pushing up. As you can see that, okay, the market ends up doing what? The market ends up breaking this high and then breaking this low, but fails to respect that point of interest. Okay. Then it breaks this high here. It gives you what? A change of market character here, which means failure of respecting a point of interest. So let's go to a smaller time frame now, an H1 time frame. Okay. I want us to talk about this guy here. Okay, let me remove all these guys that are here. Let me remove all those guys that are here. So now I want us to cut the chart from this level here. Actually, I want us to cut our chart from probably this level. Yeah, from this level. So as you can see that, okay, we have been on a bullish trend, right? The market has been doing what? The market has been creating a high low, high high, high low, high high, high low, high high, and then high high here. So which means now we have what? We have a breakout of structure within this level. How is this thing on small letters? Breakout of structure at that level. And then what do we have? We have a change of market character at this level here. We have a change of market character. So which means we can start looking for any other blocks that will force the market to go down. So on our weekly time frame, we can use this guy as our point of interest here. As our supply level. As our supply level. Like I said, do not take this entry point. It's quite risky. Okay. So now let's go to our D1 time frame and then start looking for. Sorry about that. Let's come to our D1 time frame and start looking for those entry points now. So the market does what? The market goes down, comes and taps into a POI, and then you start taking yourselves from this level here. Then stop will just be then, and then let's get how it goes about. It goes down, taps into, it hits our take profits, and then which means that this level here, it was what? It was mitigated, right? This level here, it was mitigated. And now what do we have again? We have a breakout of structure here at the bottom. So this is where your entry point is gonna be. This is where most of you guys entry point it's gonna be. Okay, let's use this guy as our point of interest here. Okay, so now let's see what the market does. The market goes down, okay, takes out this guy, which is fine. And then I just want us to go to an H4 time frame. Let's go to an 8-hour. An 8-hour time frame. Just want to look for something interesting. Because both other blocks were taken out, but it's fine. Let's continue. Okay, let's use this guy as our point of interest here. Let's use that guy as our point of interest on a 4-hour time frame. That's gonna be our point of interest, which means our supply level. Okay. Then the market does what? The market respects that point of interest. Our entry points are somewhere here, and then our stop loss is just somewhere there within that range. Instead, we can see that okay, we are switching from a series of what bullish trend to a bearish trend. Instead, so which means we're gonna start having what this guy here is gonna switch and become what a lower high. Instead, gonna switch and become a lower high, a lower low, a lower high, a lower low, and then a lower high. Okay, that's where our target is. So the market does what fully goes down and hits our target, right? Okay. So now, when the market goes down, what does it do? It creates okay, it taps into a point of interest also. So which means this guy was what? That guy was mitigated. This guy here, he was mitigated. Mitigation. So now, what do you start looking for? We have a breakout structure here, right? We have a BOS at that level there. So look what the market does. It taps into our what? It taps into our weekly order block. So the market taps into our weekly order block. You understand? So once the market taps into our weekly order block, what do we do? As traders, we look for confirmation. So now we're gonna go for what? We're gonna go for our 4-hour time frame. When you get to our 4-hour time frame, what can you see? Okay, it tapped into our POI and then it went up. So look what it does. Guys, watch me and watch me closely. What I'm about to do now is just a work of art. But then this one is not fine. Let me go to an 8-hour time frame. On an 8-hour time frame, I want you to see something. When the market went to a point of interest, it was on a series of what? Of creating, it was on a bearish trend, right? It was on a bearish trend, creating what? Lower lows and lower highs. You understand? Lower low, lower high, 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 lower low, lower high. The same thing over and over and over and over and over again. But when the market taps into a point of interest, look what it does. This is what's interesting now. The market tends to do what? The market tends to take out the high. You understand? The market tends to do what? To take out the high. You understand? Which is the thing that it's not supposed to do. Look what it does. It comes to this point of interest, it taps into it. Seems well we know that okay, we have a BOS here, which means a bottom BOS. We're gonna start looking for buying opportunities here, but the market does what? It takes out this high here, giving us what? A possible change of market character. Not a change of market character, a possible change of market character. So which means if you go to maybe a 4-hour time frame, you'll see that okay, we might have this guy as our point of interest here. Might have this guy as our point of interest here, our demand level. We might have this guy as our point of interest. Understand? Okay, and then I just want us to go to maybe a 2-hour time frame. On a 2-hour time frame, on the same point of interest, what do? We see that okay, we have what? We have a POS here, confirmation entry point. It's nothing. It's not about the order block. Even if you use this point of interest here, it's not about the order block, ladies and gentlemen. It's about the confirmation. Breakout structure, and then we have what? A change of market character here. A change of market character at the top. So which means we're gonna start looking for our entry points within this POI here. Hopefully the market comes to the POI. So now, okay, the market does what? It takes out our point of interest. You understand? It takes out everything. Okay, which is fine. This is me being real to everyone now. So the market failed to respect that change of market character. Okay, so which means okay, sure. Let me remove everything. So which means our first point of interest, our first change of market character was what? It was invalid. Understand? It's fine. So now what do we look for? What can we see now at the moment? The market went and really tapped into our point of interest. Understand? So the same thing, the same movement that we can see. What do we have? We have a BOS at this low. We have a BOS at this low. And then we're looking forward to seeing the market doing what? Taking out maybe a high here. Then which means that the high has what? Has liquidity now. Looking forward to seeing the market taking out a high there. Understand? So now the market does what? Okay, it plays around. Okay, it creates a gap. So now let's go to our 1-hour time frame. Let's go to our 1-hour time frame. Just want to show you guys something now. Okay, so the market also left what? This point of interest here, this demand level here. The market left that demand level. So basically it's coming down to do what? To fill in all the imbalances that is here. And then this is the order block that it can have. It can tap into and then start giving us those buys. But I want the bearish movement from this side that shows us that okay, we have a charge that forces the market to go up. Okay, maybe you can find it maybe on M15. Let me see. Yeah, I think we do. Let's go to M5 now. When you get to our M5 time frame now, when you get to our M5 time frame, what can we see on our M5 time frame? we can see that, okay, the market came down, creating a series of lows and highs. And then what does it do? It gives you a breakout structure, a change of market character, and then, okay, it taps into your point of interest and then goes up. It gives you a breakout structure and taps into your point of interest also. And then it gives you what? A breakout structure. So this series here, it shows that, okay, we're going to start doing what? Pushing on a strong buying opportunities. So also, technically again, what did it do? It took out this high here. We have a breakout structure and a charge, so which means it needs to come to that point of interest now. Hope you guys can see why NASDAQ it's doing what it's doing now. Okay, I don't know where my chart is. Okay, it's here. So now let's continue with our analysis now. Let's continue with our analysis. So technically we're expecting it to come and respect okay, this pure eye here. So expecting it to come and respect this pure eye here, and then that's where our entry point will be. And then yeah, that's where we can head for this first high here. Okay, so let's see what NASDAQ does. Comes down, taps into our point of interest. Then what does it do? Surely does what? Takes out all the liquidity that is lying here at the top, and then continues doing what? Continues pushing to the upside. Understand? Continues pushing, doing what? Pushing to the upside. Understand? So that's where NASDAQ is currently at now. Okay, minor things. So which means our setup here was what? It was quite accurate. It was quite accurate. Okay, so now what are you gonna start looking for? We have what? This level here. This level here is now what? It's our charge. You understand? We have what? A possible charge at that level then. Okay, a possible charge. So if you move to your 4-hour time frame, what can you see on your 4-hour time frame? You can see that, okay, the market gave us what? A breakout structure here, right? Gave you a breakout structure, and then it gave you a change of market character also within this range here. So which means there's a high possibility of the market doing what? Coming to this point of interest. Or let me just check this in my feed. From this, let me switch level from here. Here. So yeah, there's a high possibility of the market coming to that point of interest at that level there. So that's what I think NASDAQ might do. That's what I think NASDAQ might do at the moment. That's what I think NASDAQ might do at the moment. So now most people are seeing what are seeing these other blocks here. Most people are seeing these other blocks within these ranges here. Most people are seeing these other blocks here. Yes, then we have this other block, and then we also have another other block at this level here, and then we also have another other block within this level here. You understand? That's what we have now. So what I can tell you guys is that, okay, these guys here from my side, they all act as internal range liquidity. Why? Because of the market tapped into a point of interest on a weekly time frame. So why are we supposed to look for selling opportunities? Why are we supposed to have strong supplies if the market is doing what? It's gonna start pushing to the upside? So I think the market will have to take out all those highs from there till it does what? Till it finally reaches its point of interest. So which means if you go to our time frame, if you take a buy from here, let's use this candle actually. If you take our buy from here, our take profit will mainly be where? Our take profit will be mainly somewhere here. That's where our take profit will be. So that's my current analysis on US100, guys. And what is also important, guys, it's all these other blocks that the market has rewarded us with here. All the other blocks that the market has rewarded us with. So before I go anywhere further, just want to take you guys through this whole thing here. Let's look how the market came down. The market came down creating highs, lows, highs, lows, highs, lows, and then a high, a low, a high, and then a low. Then okay, this high was taken out, but the market didn't do what? The market didn't fully respect this point of interest. Then it created a change. It created a change of market character, and also the market didn't tap into this point of interest also. So what I want us to focus on is that, okay, whenever we have such things, because we are on a bearish trend now, this whole thing is what is a bearish trend, which means the market is doing what? Is creating highs and lows. We break lows and we respect highs. We break lows and respect highs. Break lows and respect highs. We break our lows and respect our highs within these levels here. We break our lows, come back to respect our highs. But then the market tends to do what at this level? The market at this level here tends to give us what? A breakout structure, change of market character, and then it gives us a quality push to the downside to tap into a point of interest. So since we're tapping into our, I think it's monthly point of interest, actually our 8-hour confirmation point of interest. This means that okay, the market will give us buying opportunities. Some of you guys let me just show you guys this thing. Some of you guys have already viewed the market differently. You understand? So it's already you already know that okay, with the other formula of understanding this thing, the market will give you it. The market will give you let me just multiply this guy now. The market will give you the theory of what? The theory of the cycle. You understand? We have the consolidation here. We have the consolidation within the market. You understand? And then we have what? We have the expansion. We have the expansion, and then the market now is currently doing what? It's creating a trendline liquidity. The market is currently creating what? A trendline liquidity. And then you have what? A possible point of interest within this level here. So this is the expansion movement. Let me just say that okay, this is what? This is the extension. This is the extension here. And then here you're gonna have what? The retracement. So this is where the whole retracement of the market is gonna happen. So which means the market needs to go up to that supply level, which is quite accurate, guys. But let's look at the view of the market. Always, okay, I have told my students, and also you can see that okay, there's this imbalance that the market needs to come fill. Yes, which means there's a lot of liquidity within this range here. But then look at this thing in this way. Look at this guy in this way here. Oh, this guy is still going back, but it's fine. Look at this guy in this way. If we remove this guy here, we are able to see that okay, within this top level here, what are we having? We're having some sort of what? We're having some sort of liquidity levels here. Then we're having some sort of what? A strong liquidity level. We're having a strong liquidity level within that level. So which means I think there's a high possibility of the market doing what? Tapping into this point of interest, going up, respecting this guy a little bit, and then start giving us those buys. Respecting those guys. I think it's gonna respect each and every single other block that we're gonna be rewarded with. Instead, but then not fully respect them. Why? Because of this point of interest here. And then if you move bigger time frame also 1 hour, let's just take NAS100 1 hour this guy. So some people we can see that it can also have what? A breaker of structure here, right? We have a breaker of structure within this level here. So this is my other view. We have a breaker of structure here. And then we also have what? This unmitigated point of interest here. We have this unmitigated point of interest here. And so which means if the market is to do it, if the market is to respect that point of interest that we're currently in, let me just go to our daily time frame. If the market is to respect this point of interest here, if the market is to respect this point of interest within this level, this supply level here, this simply means that okay, the market will do what? The market will simply take out. I made a mistake there. Yeah, the market will simply take out everything that is here. So now we might have something like this. We might have okay, a push to the downside, a tap, a rise, and then that dropped away to this monthly point of interest here. Instead, if the market is to respect this guy here, you'll have to come and take out the low that is here, which means there's liquidity lying just right below this guy here. Instead, so guys, that's my view on US100. That's my view on US100. That's my view on US100. Instead, it looks ugly because of this. Yeah, you guys can understand the situation, but yeah, thank you guys. Okay, beautiful people. Now we're gonna be tackling US30. Understand? So let's just get straight to the point. So US30, the same thing. What do? You get yourself introduced to what? To the monthly time frame. What do you see? You see what? A bullish market. Understand? Within this bullish market, the market does what? The market creates a series of high highs, high lows, high highs, high lows, high highs, high lows, higher high, higher low, and then higher high here. You understand? So what is interesting is what happens at this level here. The market creates a high high and then a high low. It takes out both highs and lows. You understand? So which means we are currently introduced to a structure where the market takes out a high and a low. So which means most people are looking for an entry point within this level and a push to the downside. You understand? But look what the market does. It respects the level, but then ends up taking them out. You understand? That is why I always tell people that okay, wait for the market to give you a confirmed trend. Wait for it to break that low. Then you're gonna take your trades at this level here. Because of here, there's a 50% win, and then 50% lose. You understand? So that's what I always tell most people. You understand? The same thing with the structure that occurred at this level here, where the market broke this high and then broke this low here. Look what the market does afterwards. It taps into this point of interest, it respects it. Same structure, the market taps into it and then shows respect, which means that, okay, now the buyers are what? They're in control. So the reason why US30 is currently pushing to the upside now is because of what? This point of interest here. So we have what? A monthly demand. We have what? A monthly demand. So now, since you know that the reason why US30 is doing this thing, we're going to go to our smaller time frame. When you get to our smaller time frame, what do we do? So we know that, okay, we have this other block here from the monthly. Let me just write it here, MN. Demand. So we have a monthly demand. So now we're going to go to our, okay, let's go to our daily time frame now. So you get to our daily time frame. But before we go anywhere further, let's come to our weekly time frame. I just want us to do a breakdown of how the market switched from buying to selling. You understand? So since you know that, okay, the market needs to come to that point of interest at that level. But then let me look for something actually. I'm looking for a certain QR. Maybe we might get a 4-hour or even an 8-hour demand. Okay, let's look for an 8-hour demand here. So okay, we can use this one here because the market didn't tap into it. So which means this level here, it is known as what? It is known as liquidity level. And that level there is known as liquidity level. So let's go back to our daily time frame. Okay, so that level there is known as a liquidity level. It hasn't yet mitigated that liquidity, the market. The market hasn't yet mitigated that liquidity. So this guy here is no longer our MNOV. Or we can have that MNOV and still have that one. So for now, let's write our 8-hour order block, refined order block actually. Okay, so now let's see what the market does at the moment. The market is currently on a bullish trend. It does what? It creates high highs, high lows, high highs, high lows, high highs, and then high low. Instead, as you can see that the market comes, taps into this. Let me just give you a proper example of like how we went about this whole thing. The market came to this level here, gave you what? A BOS at the top, regular structure. Then you have that grab of liquidity. Then the market came to do it to respect this point of interest here. So that point of interest was what? It was mitigated. Instead, we have that mitigation within that point of interest. We also have what? A regular structure here, a BOS at the top, regular structure at the top, a grab of liquidity, and then what do we have afterwards? We have that mitigation at our POI. Instead, we have that mitigation at our POI, and then the market gives us what? The market gives us a breakout of structure here. Instead, a breakout of structure there. Instead, so which means you're looking forward to seeing the market respecting one of the OBs here. So let's say that, okay, we're looking forward to seeing the market respecting this minor point of interest here. So the market does what? Okay, comes back down, then it takes out what? It takes out all these levels here, forcing the market to do what? To create what we call what? A change of market character or a possible charge. Okay, so you might have a charge here. Like I said, do not forget the rules. If the market is on a series of buying opportunities, then it takes out the low here. You can see a setup here. But I said, there's 50% of you losing the setup, but then 50% of you winning the setup. Instead, so it's up to you whether you want to take it or not. But my advice is that wait for the market to go up and then take it somewhere here and then go down with it. That's my advice to you guys. So now let's see what happens now. So the market goes up. Okay, it goes up to this level here. So maybe let's go to a weekly time frame. I think we might use this weekly order block here. We might use that weekly supply level. Supply. We might use that weekly supply level, and then the market tapped into it. The market tapped into that weekly order block, and then you can see the downside movement, but without any way of cheating the thing. Let's look for maybe an order block. Okay, we have an order block here, which is fine. We have this order block here, smaller candlestick, but it doesn't yet fit our thing. So let's go to an 8-hour time frame. Just that this thing of refining order blocks is just, it's a lot of work, man. because it didn't also tap here, and then you have to go to a 5 hour now to look for that other block that will be like suitable for our entry point. Still nothing. 4 hour, still nothing. So which means we have to use the weekly order block now. So let's use the weekly order block now. Let's use that weekly order block. So which means that's where our risk is going to be. Then the market does what? It taps into our POI. The market taps into our point of the market taps into our point of interest and then start doing what? Start pushing to the downside. Start looking for those downside movement to break this low. Okay, so the market goes down, it breaks that low. Once the market breaks that low, this means that okay, this level here it was what? This level here it was mitigated. I'm sure there's an M1, H1 or something point of interest here. Sure, there's an M1, H1 or something point of interest there that forced the market to do that. But let's leave it, man. Let's leave it and continue moving forward. This level here it was what? This level here it was mitigated, right? It was mitigated. So now this is where you're gonna take your entry point now. We have what? Your bottom view as regular structure. So your point of interest will be here. So this is where your supply level will be. That's where your supply level will be. Understand? So this guy here might act as what? As our inducement trap. Which means some sort of liquidity level. So now let's see what the market does. The market pushes to the upside. Okay. Okay, then it fails to do what? I think, let me just wait now. Okay, it didn't fade. And it taps into our point of interest here. So this level here was also cannot be considered as what? As an inducement trap. Understand? As an inducement trap. So the market taps into our POI. Then we take ourselves to where? To this point of interest here. Understand? We take ourselves to that point of interest. Okay. So the market does what? Comes down. Then once it comes down, it gives you what? A BOS also here. Gives you what? A bottom BOS. Okay. It traps its liquidity. So let's see what happens afterwards. So that's where the market is currently. That's where the market is currently. Understand? So let's fix our things now and say that okay, this level here is with this liquidity. Let's make it a bit smaller. This level here, let me remove it because you all know now. This level here, it was what? It was mitigated. So now let's go back to our weekly level. Highlight this OB here. Let's highlight this monthly OB actually. Around the I don't know why I identify that 8-hour order block, but yeah. So we have that thing here. We have this demand level here. We have that demand level there. Then we have, I don't know why personally. But it's fine. It's fine. Okay, let's continue now. So now we have that what? The market tapping into our point of interest. So let's go back to our daily time frame. So most people, what are they thinking? So what do you do as an individual? You come here and start looking for this ranging liquidity here. Start looking for this ranging liquidity here. Yes, then you can see that the market is giving what? A ranging liquidity. I think I have to do a test. So the market gave you what? A ranging liquidity. So which means if a point of interest is to be very important or be valid, you have to use this one here. Understand? You have to use that point of interest there. Understand? So at the moment also, what do we have? We have a breakout structure here, a bottom here. We're looking for confirmation. We're looking for confirmation. Breakout structure at that level, a change of market character at the top, then have a charge at the top. Have a change of market character at the top. So which means on a daily time frame, this is where our demand level would be. That's our daily demand. That's gonna be our daily demand level. So yeah, most people they're gonna look for what? They're gonna look for a push to the upside to this order block and then they break to this low, which is possible. But then look at this thing. The market tapped into a monthly order block. So which means I might have a drop maybe to somewhere if the market comes down, maybe to a certain order block and then start giving me those push to the upside. Instead, I don't look forward to seeing this guy doing what. I don't look forward to seeing this guy pushing to the downside. But if the market tends to do that, this means that okay, it will respect that point of interest, take out all the lows, and then I don't know where it's gonna go afterwards, but it will have to come back to that level to respect a certain point of interest and then give you those sales. But for now, I'm gonna start looking for the drop to this POI here, the tap, and then to this guy here, and then maybe I don't know, rise afterwards. Or the market might straightly do it. The market might simply continue going up, then come back to respect that guy, and then give you those buys afterwards. So guys, this is my analysis on, but let me show you guys how you would go about like entering at this level here. So let's go to your 3-hour time frame. So you get your 3-hour time frame, what is important? So let me remove everything here. So the market taps into a POI, right? This time it didn't tap. So it taps into a POI, right? Once it taps into a POI, what do we have? We have a breakout structure here, right? We have a bottom BOS. And then what are we gonna have here? We're gonna have a change of market character here. Instead, we're gonna have what? A change of market character. Instead, so which means your entry point is gonna be where the entry point is gonna be at this candlestick here. That's where your demand level will be. So which means you're gonna swing this trade from this level here to where? To breaking those highs here, which it did also. Breaking those highs there. Instead, so now we're looking for that drop up. Now you're gonna start looking for that drop. So now you're gonna start looking for that drop. You're gonna start looking for that drop within US30 at the moment. So which means all these guys here, they're gonna all act as what? Internal range liquidity. The market will have to come eliminate them just because of it tapped into that point of interest. So that beautiful people. Also, did you see how the market went about this whole thing? It's the switching of trend. We are on a bullish trend, creating highs and lows. Then the market did what? It switched its trend from there to pushing bearishly. Understand? So this is the low now. So once the market breaks this high here at the top, this means that okay, that low will change and become what? Maybe a bullish trend. So let's say we have a high here. I mean, that breakout there might have something like this to the upside. Now the market might start giving you what? The bullish trend afterwards. Understand? So yeah, thank you guys.